Time now for our crypto mastermind segment, and I'm wearing my "No, I won't tell you how to buy Bitcoin" t-shirt because many of our subscribers already have their bag of Bitcoin. They know all about it. Many of them are already millionaires and multimillionaires. So we're doing a special segment today. I won't tell you how to buy Bitcoin, but we will talk about Floki. I need to look at these. Mantle and Bonk. There is a term in cryptocurrency, in the cryptocurrency world called unicorn, and that's what people want. You want the small token that has the possibility, we're not promising, but the possibility that this could make a 30x, 100x, 1000x, and that's where you can put in a little bit of money and make a lot.
FFG has a thing to see. It's crypto masterminds. Take it from me, it's the place to be. It's with the crypto masterminds.
All right, hi there, crypto fans. Jordan Finiseth is here with the details, and we're putting this out as a courtesy to all members. So this is your chance to see us at work with Crypto Mastermind. How you doing, gentlemen?
I'm doing good. And we're going to be releasing this some on social media as well. So other people, even outside the community, can kind of get a taste of what we're actually doing here and what we talk about. And as you mentioned, yeah, these are, I like to call them the degen coins. When I got into cryptos, it was a crypto degen, like searching for these low price tokens. And some of these that we're going to be discussing today definitely fit into that category for me. What do you think, Mike?
That's a great idea. But let me preface something. We're doing this year for 8 years, and now we have a community of over 200 plus millionaires. So you can decide whatever you want, what kind of direction you want to take your life. But we're doing this here as a courtesy that you have the same opportunity and that you have a starting point in your journey and how to create a better life for yourself in the coming times of digitalization, digital IDs, to serve these kind of novelty things with wealth creation. So welcome to our team here, working to our group where we're discussing how to flourish in the future. Instead of looking at, oh my God, I'm a victim, everything's changing and I can't do anything about it. No. So welcome to being here for the place that is looking solely to make you thrive in the future with any kind of compliance and with the ideas and topics about wealth creation that we present here. Welcome aboard there.
I'll use a surfing analogy because I'm a surfer. It's like a big wave is coming, and you can see that swell coming, and it is going to form up and it's going to break. And that is everything that's happening with technology, with the transition to a new financial system where all the assets are going to be tokenized and accounted for on blockchain. So that wave is coming, and there's no denying it. A lot of people are going to get wiped out. That wave is going to crash. They're going to tumble. They're going to drown. They're going to get wiped out. But the smart ones are going to see that coming. They're going to take off on their board, and they're going to ride that in and have a great ride. So that's what we're trying to help you do. Ride that wave.
And just to kind of stress the point that this is going to happen, there was a recent announcement from Trump's circle and his World Liberty Financial token and ecosystem is planning to tokenize all of Trump's real estate properties. So so to open access to more investors. So if he's doing it, I'm telling you, that's just a precursor to what's coming in the future. So this isn't going to be slowing down. And the sooner you get on board and kind of learn to navigate this world, the better off you'll be.
Now, I have to admit that I've been studying cryptos for 8 years now, and I own quite a number. I have not heard of Mantle, Bonk, and Floki, so I'll be interested to hear the good, bad, and ugly on these and see the charts.
It's because you're a refined crypto investor, not a degen like me, even though I've been in just as long, right?
So why are we giving this out now? Why are we doing this now? So we just recently had what is called the Red September. It is the SEP. September is always a time where charts are going down. So this is the buying opportunity that you position yourself in these times. September drastic falls, and October is then basically a restart for the year end and the beginning of the year. actions price any kind of market. So this is why we do this now. We want you to have an opportunity, a real world applicable opportunity, and utilizing information out of this, what we're doing here. So stay tuned and let's go into it. Where do you start, Jordan? Where do you want to start?
Let's see what I got first up. I think we got Mantle first on board. Yep. Mantle, Bonk, and Floki. The good, the bad, and the ugly. Mantle, finance scaled. The good. And these are kind of truncated versions. We used to do a longer version of all these presentations, but a lot of the different things kind of got repetitive. And this is just kind of a more shortened version to kind of get in the main points and let you know what you need to know about these specific tokens. Mantle, the good. Mantle has seen remarkable positive momentum, with its price increasing 190% since August 1st, hitting a new all-time high of $2 on October 2nd. Strategic partnerships with Bybit for fee discounts and staking perks, Samsung for mobile adoption, Coinbase listings, and a $2 million World Liberty financial investment for RWA tokenization have driven user growth. The network boasts high staking rates up to 68.7%, with products such as METH and FBTC offering yields and bonuses to attract both retail and institutional partnerships or participants. The bad. Adoption lags are evident, with Mantle trailing competitors like Arbitrum in daily users and transfers, which could lead to a dead ecosystem if momentum fades. The project's tokenomics raise centralization concerns, with a 48% treasury-held supply and future unlock pressures, compounded by unproven modular scaling in a competitive L2 landscape. The ugly. Political ties, such as the Trump-backed World Liberty Financial's $2 million stake, fuel conspiracy theories of elite influence peddling, positioning the network as a partisan tool for asset tracking, seizures, or loyalty schemes in a post-2024 election era. The platform's efficiency invites nefarious uses like money laundering or doxing, potentially enabling a global reset monopoly where everyday spending is pre-vetted and non-conformist funds are frozen. To kind of I'll sum it up in a critical perspective, Mantle is a high-conviction bet on a well-funded, centralized exchange-backed Layer 2 that has differentiated its technology through a modular approach. The investment hinges on its ability to translate its immense financial and centralized exchange support into sustained, decentralized on-chain developer and user adoption against fierce competition. Investors should monitor its decentralization project, specifically the decentralization roadmap for its transaction sequencer, ecosystem metrics, such as growth in total value locked, unique active addresses, and critically, developer activity compared to Arbitrum and Optimism, and its technical performance, including the successful and secure implementation of its ZK rollup transition. In summary, a critical recommendation for Mantle is not to avoid it, but to approach it with a level of due diligence far beyond simple technical analysis, specifically focusing on the decentralized adoption and governance of its powerful yet centralized corporate backing. That's a quick rundown of Mantle.
When you're talking about Mantler, when you did the rundown here, what is your first impression on this one? Like, where does it come from? What does it solve? Just like in 2-3 headlines after the good, the bad, and the ugly.
To me, it's like a bridge platform between TradFi and the DeFi cryptocurrency ecosystem. And they're using a lot of the things that have arisen out of the cryptocurrency ecosystem to kind of bootstrap and get institutions more involved. And they're trying to also grow as a platform and ecosystem.
So do you think that metal is infrastructure, or is it a temporary solution?
Long term, it'd probably be a temporary solution to get us to something better. There was a quote today I saw on X, and somebody said, in the future, centralized exchanges will just be the front page for decentralized exchanges.
You see that already with Binance. Binance has the Binance Smart Chain BSC, and there is decentralized operations going on many projects, specifically Asia centric, South America centric projects that are being launched there and that are being utilized for the coming BRICS environment there. But when you look at Mantle, this is something that that gives an opportunity or a solution for businesses to bridge the centralized world into the decentralized world. And with that, the question is how much automation, how much future in automation is going Mantle to show, to prove in order to grow into something else. So if it's currently a tool for a transition, what is its future? For that here, my observational critique point, or not critique point, it's actually like be careful and cautious when you're looking at projects in the DeFi world that are coming from DeFi or that are bridging to DeFi. Keep a short leash on them. Don't fall in love with them too much and too long, because DeFi is super volatile and very quick-lived. We now have over 4 million tokens in DeFi, of which 99, when we'll have wonderful reset, at some point in time, will not make it. If they don't have a sense, if they don't have a place, if they don't have a real-world asset, a solution to the Internet of Things, they're not going to stay. Word of caution with that. For any DeFi. And if you're looking at these DeFi coins and you just want to have it do a little bit of profit, that's fine. That's always great. Some of those tokens are going to have stellar races. So let's take a look at what we have here in the chart, shall we?
Yep. And you mentioned that with Binance. Coinbase is doing this very similar thing, and they're kind of tapping into the base network, which is an L2 on Ethereum. There's definitely this merging between the centralized exchanges and decentralized exchanges.
Okay, so because we're giving this out as a public service piece here, segment here, I need to explain a couple of things. We're utilizing very traditional tools on the chart here, and as you see in the top here, it's called MMMNT-USD. Am I correct here? Okay, so this is basically the trading pair. It's Mantle USDT as a stable coin. And for the ones that are asking themselves now, what is that kind of blue wave here? That is called the Elliott wave. Absolute on a weekly chart. Weekly charts are always a little bit longer term charts. You're charting a trajectory for a little longer time frame, because we're not trying to look at coin or a token as a trader. We're looking at a perspective from an investor perspective. Is it the right time to go into something we want to avoid short-term capital gain taxation? And this is why we're looking at investments or at coins and tokens from a different lens than a trader. A trader says, oh, I can make $2. And they're jumping on there like that's the hottest gal around. And then they sell it off very soon. But we're looking at buying as deep as possible. That's the moment when your father is shouting at you or your girlfriend is leaving you because, oh my God, you didn't sell when it was high, now it's low again. And basically we're waiting for that low point where everybody's yelling, screaming, and shouting, and we're trying to position ourselves smartly in a world that is volatile. Volatility is something that you want in order to make profits. You don't make profits on linear growth. Linear growth are so-called boring businesses. And boring businesses are great investments if you want to stack money into that and have something creative, something that has a real-world value for you. But when you're looking at cryptos, crypto is crazy. It is volatile. It is both of the gentlemen that you now see here. They were heartbroken with crypto because it went so far up and everybody thought they made it, and then it, over 2 days, went so far down again that they basically lost everything. And that is what you want in order to make profits. Now you just need to learn how to deal with this. So what is the chart telling us here? Classic tool of so-called Elliott wave theory. It's a theory that says that when a chart goes up, it has to do 5 steps. And what you see is here, the first step, second, third, it's not confirmed. So it's still on the way up. And then it will go down to number 4. And after that, it at some point in time will go to a number 5 up here somewhere before it retraces about 60%. The 60% retracement is going to be about here. This is going to be about here when it's going to go fall back down on its way up. So number 4 can be here, but when it goes to when the number 4 has been reached here and it goes up to number 5, it might well fall under this green step. This is when everybody is then screaming and yelling and saying, oh my God, crypto's broke my heart, or crypto's ruined me. That's the point in time when you want to have happy times. So from a trajectory, Mantle is already on a way of a first wave upward on a weekly chart. Let's look at the daily chart. What is it telling us here? So on a daily chart, every candle that you see here represents one day. It's all one day. One day, one day, one day, one day. I just went from a weekly to a daily chart, and it's telling us that at S, currently on a smaller chart trajectory, on the way up to number 3. So it's still climbing. The full lines that you see here mean they are confirmed. They're done. But the dotted lines here mean they're not confirmed. The tool that I'm using here to display that is called Trading View. And in order to display Elliott Wave Absolute, you need to have a pro subscription in order to chart this. Then you can find Elliott Wave Absolute. So let's take a look on what it did so far on the daily chart. What we want to measure is the lowest point here to the highest point here too, as a very traditional tool with a so-called grand Fibonacci ratio. Everything in life has to do with physics, physical laws, the laws of nature. And the charts are not a difference to this. Charts are following very specific patterns. So in order to find out where this wants to go into the future, we are utilizing this grand Fibonacci extension. So before we go to the complete Fibonacci extension, let me show you that you can measure the energy of something, of a chart and its rise. So here's a smaller one, a smaller Fibonacci extension, and you have all these kind of numbers, and we want to find out where we are in the journey of the Fibonacci extension, of the first impulse that it had from the very lowest point to the first high before it dipped down. So lowest point to the first high where it dipped significantly down. That would be that dip here. It tells us that it's currently still in its first. Let me take the other one away. That's just confusing probably for many. Just a second. This is crazy here. Let me take this my way. Now what you see is that the impulse that it got from the very bottom to the very peak. The very first peak here is a scale that is going over a couple of numbers. The most important are 1.6, 1.8, 0.5, 0.6, 1.618, 2.618, and depending on what kind of energy or impulse this coin and token has, it can go up to or overshoot 4.76 here on top. Currently, what you're looking at is that this token wants to crack this level here, the 2.618, and so it hasn't done that before. It hasn't done that. It hasn't shown what kind of energy it has. So far, it's looking great. So we're looking at the very first wave of a chart. And when you're looking at a very first wave of a chart, you can say, okay, it's interesting to, that might be interesting to go into this one still before the next peak. So what is the peak that it can reach here? Between 2.6, 18, and 4, 764. We don't know that yet. So we're in the observational phase with a very early market in that coin. What I can tell you, though, is that what it's doing right now here with this kind of zigzag pattern, that is another kind of an Elliott wave. We have two Elliott waves. We have a longer term, that's the BL, and the shorter term, that's the orange one. And on the orange one, it says it did the 1, 2, 3, it did the 4. Now it's on the way to the 5 and peaking out. And so I estimate that we're going to be somewhere peaking out on, not peaking out. So that's the first top that it's going to have. The first top, it's going to be somewhere around here, and then it's going to OPGs somewhere around here, where it's going to have its first top, and then it's going to retrace down, then it's going to fall down again, reorganize in a pattern that is called a B. A is down, B's up, C, and then it's a good point in time to reevaluate that. So from a perspective, investor perspective, that thing is brand new. It is a nice thing to have or a nice thing to look at. But I have to admit, currently at the price where it is already, it is not the cheapest investment at one point, 9,557. So one MNT would equal 1.955. This is when this is already when you have like between $5,000 and $10,000 to throw at something that you can utilize a coin and token like that. It's not the cheapest thing. So if somebody's brand new and you're looking for make the better profit, that is not necessarily a thing for you to look at as a so-called DGAN coin or DJ token. So now let's look at where it might go to in the future. On the daily chart, you just
say the range for that box you drew.
Yes, the range for the box is between 209 to 132 minus 33. And it goes back down, then it retraces. If it has more energy, that box might be going up to 4. That would be then 3.24. But it has to prove itself. Currently, it hasn't proven itself. It's the first big wave that it's doing. So from an investor perspective, it's, you can look at that and say, let's wait and see what it's doing. Another observation, if it's already 195, the probability that it's going to be very much higher in the future is there because it represents a certain value where you already say, okay, that is worth something. With DeFi coins and tokens that are cheaper normally, that is a thing where when you look at the value, if it's already a higher value, it can be good to hold it longer. So now let's extend the grand Fibonacci ratio to the top that it already created. The higher top that it made, very bottom. So the very bottom here, that's this year to this first peak that it had. And on this ratio, it tells us that the 0.5 and 0.6% level is that what it wants to reach. This is exactly where that I put in here before you see the line demarks it actually perfectly right in between those two. So the top of this chart here, somewhere here with a falling down, restructuring, resetting itself, and starting a new pattern, might be on a longer term trajectory. Something that can lead to this year. Between 4.5.58 and 4.90. That's not done. Then that is still. That's the next point, the next waypoint that it reaches after it dipped down with the first green box. Dipped and down. And that is what it's going to reach then when it's going up the full flute. And we cannot answer this, what the full flute is going to be currently, because it's brand new. I can just give you an estimation on what I'm seeing on a daily chart here currently with a very, very rogue initial. Let's look at the very first. Did 1, 2, 3. So we take this one here. That is the bottom that we measured just until here. Now we see 2.618. It's A. It overshot 3.618. It actually went to 4.23, 4.23 to 4.41. So if this is correct, if it can repeat this kind of pattern, that it goes to 4.41 on a larger set, then we're looking at this here. Then M, we're looking at between. So that would be the top here. That is between 657 to 676. That would be only a 3 times. And because it's a brand new coin and token, the indications with a scale here, with the very first scale here, is just an indication. We need to find out where the next stop is. Is it going to reach only the first box and then we're going down? Then we can measure from the bottom to this first box. And then we have basically a determination of the chart for where it wants to go in this bull run that is just starting. The bull run is just starting. So it's still a great opportunity. But again, if I would have like something between $500 and $5,000, that would not be necessarily something I would look for. I would look for a different kind of token. Are we good with that one? Questions?
Yeah, I'm good with that one.
So basically, you want to wait for that to dip down to $1 to $1.20, and then buy some and put a sell order in it between.
You want to be conservative, $4 to $5.
You want to be
or if you want to go
$4 to
for
$5,
$6 to $7.
if you want to go for it, 6 to 7.
It's more of a set it and forget it plan where you do
That's
that
more of a
and leave it.
set it
You
and
could be
forget
there
it
for a
plan
few
where you
years,
do
but
that and you leave
eventually
it, and it could be there for a few
could
years,
possibly
but
get up to that
eventually
level.
it could possibly get up to that level.
Jordan, can you turn your microphone a little bit up, because it's probably a little bit too low. Okay, so let's take a look at that when we're coming to the first peak and revisit that at a later point, as we do with all the coins and tokens when they're traveling. Because sure, when they're going up, you want to know, okay, what is your opportunity window? What does the chart tell you? By utilizing just classical. And charting tools like the elite wave pattern and the grand Fibonacci ratio.
And since this is a video made more for the public that haven't heard our previous ones, do you want to kind of mention why you think this is going to be a little bit of a longer bull run, or this one's just getting started, especially since it kind of started in early 2023?
Jordan, it's still the microphone. If you can't put it up a little bit, maybe on the gimbal, maybe it's a bit better. Yes, definitely. Okay, so what was happening recently was that Raoul Pal showed approximately half a year ago how the Bitcoin chart is heavily entangled with A, so-called M, the world monetary supply. And the world monetary supply, always when money is being injected worldwide, like in every currency, all currencies together, when money is injected, then Bitcoin is going on a run. You can overlay these graphs and you can see wonderfully how this works, but with a couple of changes. In the monetary policy of reserve banks, to load up or already bring back repatri, like the repatriation of US dollar, led to an effect on the charts. So normally we should have been already in a bull run, like with a first wave in September, like a nice first wave. But that was pushed out because the Treasury and the Federal Reserve Bank have a program to bring back, I think, $1 trillion back into the United States. And so they are sucking the liquidity that's created off the market. Sucking the liquidity off the market is never leading to higher charts and higher prices. What it's leading to is to side wave movements and to dips. And that is what currently happened. We had the sideward movements and the dips. So once the 1 trillion is full that they want to have, so there's a smaller one, 150 billion. I think that's a larger one that they want to fill up with a trillion one. This is going to be then directly visible in the charts. And for that, we're going to see then the bull run starting a little later. But the good thing about that is we're going to have a little longer for a couple of coins and tokens. That will be the second and third when they're rising. So we're not going to see the big run possibly in October for everything. We're probably not going to see for everything in November. We're going to have October going into November, and then in December a nice run. Then it's going to cool down probably in January, and it's going to pick up again towards end of February, March, April. But that depends. That time frame heavily depends on when the liquidity is not being sucked out of the market. The last time that this liquidity was sucked out of the market, Dick had one of his most famous crypto remote viewing sessions where he saw there's a black hole and the charts are going down. So we have a similar situation like that that happened in 2021, 2022, like December 2020, one going into 2022 where we had a little sideways movement. So that's the current situation.
Bonk. For the people, by the people. The good. Bonk has demonstrated strong market resilience, trading at 0.000021 as of October 2nd. Supply dynamics improved through a 1 trillion token burn in Q3, with future burns planned, potentially supporting price targets of up to 0.000102 by end of year. Ecosystem advancements include Bonk Fund for meme utilities and H2 Bonk Arena updates for gaming, bolstered by a $25 million investment from NASDAQ-listed Safety Shot in August. There are roughly 1 million holders, with ETF hype driving community-led adoption and forecasts of 100% plus gains in a recovering market. The bad. Development and adoption inconsistencies persist as on-chain activity wanes despite an increase in holders and burns. Regulatory exposure to Solana's outages and threats, combined with the whale concentration enabling dumps, heightens security risk. Social sentiment on X portrays it as a top loser for opportunistic buys, underscoring challenges in converting hype to enduring growth amid diminishing enthusiasm. The ugly. Bonk's decentralized facade masks centralization risks, with top holders dominating supply to orchestrate pump and dump manipulations via influencer FOMO, potentially forming a Solana cartel that extracts wealth from retail through community airdrops. The meme cult induces psychological dependency via staking and exclusionary hype on X, which some theorize is a VC psyop to prototype CBDC behavioral controls that gamify spending limits. A critical perspective. Bonk is primarily a high-risk, high-volatility, speculative asset.
Yeah.
While it has achieved significant market centralization and integration within the Solana ecosystem, investors should view it with extreme caution and acknowledge that its value is highly dependent on sentiment rather than fundamental economics. For that reason, Bonk is an asset to be considered only by investors with an extremely high risk tolerance who are prepared to lose their entire investment. It should be treated as a pure gamble on market sentiment and viral hype, not as a long-term, fundamentally sound investment. Recommendation: if you choose to invest, limit exposure to a very small, non-essential portion of your portfolio and understand that you are trading on short-term speculation.
All right, so what you have here with Bonk is a token that is a so-called meme coin. Meme coins are gamble coins. Some of them are going to have a function. For instance, what we thought of a meme coin that has no would have, like many investors thought in the past, would not have a function, was Dogecoin. And Jordan, you just posted recently an article on our page, Dogecoin, and the headline was, "The joke is over." Why is the joke over?
Because it got listed as an ETF on an ETF. It's no longer this speculative, funny aspect of the cryptocurrency market. It's become a legitimate possibly treasury reserve type asset.
So when a token, a coin or a token gets listed with an institutional investor on a so-called ETF, that's an exchange traded fund, then we're talking big boys money. We're talking about that something has been taken into as a treasury asset for an underlying fund, and now it's being basically traded that the bank or the Charles Schwabs of the world can trade it to. And once they start trading it, so when you are putting money onto an ETF, the ETF business has to purchase the representation of these tokens from the crypto market. So they are basically buying the cryptos, and you're just betting on the chart. So let's take a look at Bonk. Bonk is it's a meme coin. It just says, hey, we are going to build something that is amazing, that is great. We're full of optimism here. We're going to have a community. We're going to make the world a better and greener place. This is what you hear from many of these meme coins. The reality of that is that most of the meme coins are there to be pump and dumps. So somebody's hyping it, they want to entice you to buy it, and they dump it. And that means that you're going to losing what you had in there, and somebody else is going to be really wealthy. In the past, what happened was that these kind of meme coins have been used as a way to launder money. So if somebody basically stole from somebody Ethereum or Bitcoin, how do you get rid of it? One way in the past was to basically put it into a meme coin and to have it do what it can do there to launder the Bitcoins, have it run up. You're selling everything. You just wash the money. And in the past, it was that you could, because we didn't have that many KYC and AML, know your customer, and anti-money laundering laws, and then they bought back. The other assets like Bitcoin and Ethereum at a later point as their treasury asset. So let's take a look at the charting. Here we go. Let me adjust the box here. Okay. Wow. So first thing that I see here is that we have a theme, and that theme is that thing. That thing is a runner. There's money behind it. There's a purpose behind it. It works like clockwork. And that thing is marching. So where is it marching towards? Let's get the peak here. So that would bet the debt. Okay, now we have it. What you see is that it's currently undervalued under the green line. It is under. That means if it's not on the line where it would rise on the green line, it's not on the line. If it's below that, it's basically under its value. It's being pushed down. And we'd love a couple of formations. And one of these formations is a so-called falling three peaks. Do we have? No. Sorry, do we have the falling three currently? No, we don't have them. We have even more than that. This is crazy. This is a crazy thing here. Give me a second. So what we have here is we already had the first more than three falling down. It didn't peak over it. And now it's creating the same kind of formation, falling one more time down in a larger set. You would say that this is a flag that it's building. And hang on, what it's doing, it's bouncing alongside its break. Let me show you what I mean with that. It's better I do that over here. You see that I put a green line from the very top here to this top, and it still needs to reach it one more time. So top, it will reach it and we'll go one more time. Is it a buying opportunity? Is it? Yes, it's a buying opportunity because it's going to go when it hits that green line. It's going to go one more time down. And when it's under this green line, everything under. 402 is a buying opportunity. It might be going up for a little bit, touching this green line here. Then it's going to come back to the green line. So if you want to, have a nicer entry point for that is 402. That would be my look at that. To enter at that point in time, let's take a look at the larger trajectory, because that's now the more interesting thing, the more fun part. What does it want to do now? And again, we're utilizing the so-called grand Fibonacci ratio, and we're taking the lowest point. So we do have two dippers here, two low points at the bottom here, where it started to form on. So let's take that and let's take a look at what it wants to do on its way up. So since this here is a wonderful double low, and that low point is the same low point as here, we can take a look at this formation. We didn't have that with Mantle. Mandel was too new for that. But here we do have a great way to look at what does it want to do in the near future. This is basically a near future pattern. It's going down. So the near future, it wants to reach the shoulder line of this tip here. And if it does that, if it reaches this shoulder line, it's going to look like this on our way up. So we're looking at Bonk to go between that's the first waypoint, and the first waypoint here is going to be somewhere between 405 and 406. So when you buy at 402 and it goes to 406, that's a 3 times just on the first waypoint up. That smells an awful lot like a lot of energy. So let's look at the energy level that it has in the past, that we can assign a value, what it did in the past, and project it in the future. It is a theory. It is not set in stone. It can go somewhere else. But what it can do from the low point here, let's check what it did from this to this here, because that was the low point here. Same low point as here. Low point. Then it peaked here. How much energy did it show us, and for what it did in past actions? So we're looking at history. It tells us almost 30618, and on the first run up, very high energy, and then it overshot 4.76. Wow. So here is a lot of energy. There's a lot of market participation by people that are looking for a buying opportunity in the low cost crypto market 4.76 it reached, but it took the 4.76 to reach this one here. From that one, from January 2024 to November 2024, even that. Here is a very, very quick trajectory. If you're looking from an investment perspective, you're looking at a year, 2 or 3. This year is short-term runner, and then a dipper. So what does it tell us? From the overall chart, I put a very interesting line in for you. So this here is the common denominator for low points. This here is still in its first epoch. Epoch is when a chart goes through all its rises and falls, and it dumps down, and you can buy it at another low point. That would be a higher low point than that, what it was already. So we're still in the first generation, in the first epoch here, because the low points are the common low points. This year was the greatest point to buy at that. And that's just like a couple months ago, March 20th, 12th, April. That was a great opportunity to buy. So what we see here on a larger scale, what it's doing right now is it's doing things, Elliott waves, it's doing the blue things here that we call the Elliott wave. And that's what you want to see if something has activity. This one has activity. So we see 1, 2, 3, 4, 5. That was the first one. Now it dipped down. Now the next one. Basically, this here, what you see is another Elliott wave that it already created. It needs to do 5 waves up in in a grander scheme. I'm not going to explain that today. But this year has a ton of energy. And just from seeing what it wants to do right now. And we're looking at the 4.76 and reaching out on that. That would bring us here. It would bring us with these to this point. And that is, let me blow it up for you because it's super small. That would be between 3018 to 30189. What does it want to do on the grander scheme of things that what it already did in the history? So let's set that aside here for a second. And let's take a look at this one here. Now we're extending this one to a different scale. And that scale is, let me get that away because me blow it up. Okay, that's going to be fascinating for you guys because we're looking now at something that is in action. That's the peak. That thing has a lot of power, a lot of juice. Currently it does. So bear in mind, it is a high risk, high volatile asset. Lowest point here, highest point here. What does it want to do? This is what it created in order to get to that peak in a couple of months. Waypoints. Now look at this. This here is very close to the 2.618 on a greater scale. Let me blow it up. That. Okay, so this one, this waypoint here is between the two on very grand perspective on that what it did in the history. If it repeats the same pattern, then this waypoint is going to be somewhere along here, actually. Even so, we're looking at waypoints of, yeah, the 3018 stays, but it's basically 302 then now because of the power that it has with the juice and overshooting, all kinds of shite. We're looking at this here as your opportunity. And that opportunity would be somewhere between 303 and 3031. And you see how small the chart is currently. The important part is that first little green box here. We want to see that the chart reaches the same kind of level that it did with this peak. It needs to touch it or be a little higher than this. Now I'm blowing it up again. So it needs to touch it. And if it's a little bit going upward direction, just a little bit, if it's doing that, it's a positive trend. If it's going downward, it's a negative trend. You might not want to be invested in that much longer other than on these waypoints up here. If it shows you that that the next peak is going somewhere under or touching this green line, if it's falling, then it's still not on its run. If it's slightly pivoted up, just slightly, it has a positive trend. And with that positive trend, it's going to dip down one more time, and then it's going to go on its run.
Questions so far? That was pretty clear.
All right. Word of caution. All meme coins are risky coins. You need to know that when you go into cryptos, it's not Bitcoin, it is not Ethereum, it is not something like HBAR. It is super cheap, and you get for $100, $200, $500, $1,000, a ton of them already. That can give you a return of $10,000. Or when you put $1,000 into that, at the current price with 4 zeros stepping one, we're talking about a a 10 times jumping a zero. And then plus the additionals, we will see where this is going. For me, the important part is it's a great price to buy still. And when it overshoots this line here, this is when I want to measure. This is when I want to apply the Grand Fibonacci to find out where it's then really going.
One to check back in on in a little while.
Yep, go ahead. One more.
Floki, meme culture, real utility.
Floki, meme culture,
The good
real
Loki
utility.
trades at 4 zeros,
The good.
88 with 20.
Floki currently trades at 4 zeros 88
to 3
with
zeros 51.
2020 high
Amid
forecasts
altcoin
of 3035
rallies,
to
the ecosystem
3051
thrives with Valhalla
amid altcoin
Metaverse
rallies.
boasting
The ecosystem thrives with Valhalla Metaverse boasting 5.8
players.
thousand
Flokify
or 5,800 players. Floki DeFi standing at 313.5 million in TVL, and Telegram trading bot driving
plus NFT
176.7 million in volume, plus NFT educational tools, Shop Floki, and a debit card for future or for revenue.
The first
Institutional
Floki
milestones
ETP
include the
approval on
first
the
Floki
Swiss exchange,
ETP
a
approval
Robinhood EU
on the sixth
listings
Swiss
with
exchange,
collaborations with
a
DWF
Robinhood
Labs,
EU listings,
and a potential
and
US
collaborations with DWF Labs and a potential US ETF.
Nice.
The bad, Floki contends with significant price underperformance, down 55% year-to-date against USD. Community frustrations mount over the team's repetitive talks and
branding it the
unfulfilled
weakest meme coin
promises,
under $1 billion valuation.
branding it the weakest meme coin under $1 billion valuation.
Let me help. Just hit me for a second. Okay. Investors are not looking at the promises that they put out and what needs to be done. Investors are looking at charts. They're looking at they have a different perspective of that the folks that want to change the world, and they're looking for a community, and they're looking for a wonderful tool to be part of a financial revolution. They're looking at what the community tells you an investor doesn't. You don't give a rat's ass about that.
Go ahead.
Intense meme coin competition hindered progress with ETP, ETF delays, inconsistent on-chain activity, and a failure to sustain engagement in a volatile risk-off environment.
The ugly Floki's vibrant
The ugly
facade
vibrant facade conceals centralization perils, where team-driven marketing and Musk-inspired memes enable whale-orchestrated pump-and-dump schemes through airdrops and burns, potentially psyoping retail into staking traps as an insider wealth extraction tool. It's debit. Oh man, I remember even like just in my own personal experience going back. The promise of staking was one of the worst decisions for some things because I would just hold them through the whole bear market and not sell them at the top. So yeah, staking is a little bit of a double-edged sword in that regards.
Yeah.
Floki's debit card and Shop Floki features risk surveillance overreach, tracking spending under utility pretexts, while conspiracies frame it as a meme laundering vehicle for elites.
That's what these coins are. I just said that prior in with Bonk. I said it with a couple of others in the past. I said it was SHIB. SHIB was one of the greatest money laundering deals in the past for getting stolen bitcoins from other exchanges, flipping them into another thing, having it run up, sell it, and then let it go down. But it's still going to be there. It's going to be still used for pumping, at least in this bull run. Let's isolate this for this bull run. It is there. So everything in the top 100 that you see is going to be there. No questions asked. That's going to be that case. You're not going to see anything die in the top 100 on CoinMarketCap or on CoinGecko. So Floki is in there. We can look at that. And if it is used by whales to shit money into that and to drive it up, that's what you want now. You need to play the whale game and not the victim game. That's the important part. If you play the whale game when they shit the money into it and they inject it in there to have that run up, that might be when the whales that are liquidating Bitcoin at the high point and Ethereum at the high point then take the money and put it here and create a whale. An incredible demand for these meme coins. That will count for Floki. That'll count for SHIB. That'll count for Bonk. That'll count for Pepe. They're perfect vehicles to have a secondary. profit generation machine after the main coins and tokens went up. So go ahead, let's look at that.
Just a critical perspective. Floki represents a high-risk, high-reward investment that is transitioning from a purely speculative meme coin to a project attempting to build a utility-focused Web3 ecosystem. While the team is actively developing projects to justify a serious valuation, investors should be acutely aware of the significant risks that still define the asset. Floki should be viewed as a highly speculative venture into the world of Web3 utility being built on a meme coin foundation. Your investment thesis must rely on the belief that 1. The team successfully executes on their complex utility roadmap. 2. These utility products gain significant, sticky user adoption. And 3. The meme-driven volatility doesn't decimate the investment before the utility value can fully materialize. Overarching recommendation, only a small, highly risk-tolerant portion of a diversified portfolio should be allocated to an asset like Floki. The potential for catastrophic loss is high, commensurate with the potential for outsized but unpredictable gains driven by speculation and community hype.
I'm looking at Dick. He's sitting there and he says, Floki my ass. That's not necessarily something where he says, I don't want to have that stress.
Well, to be honest, I'm 72 years old. I can probably count the years left I have on my fingers. And yeah, I don't need coins like this. So, but that's good. We'll help the younger people.
Yes. So these are so-called high stress. A lot of hair loss, chewing your nails off, sitting in front of a computer for days, not talking to your girlfriend or your wife, not walking the dog looking like a caveman, and the apartment or the house looking like a cave when you're sitting there for the right point to sell. So these are things that you want to catch on the way up, but you don't want to be on the very top. If you're too greedy here, you might just have you. You're shitting yourself in 3 different perspectives. You're living like a caveman. Nobody's talking to you. You're losing all your friends, and you're going to lose all your money. So there's different kind of aspects how you can fail on this. But if you play the whale game, you don't want to be jumping out of these things on its peak. So let's take a look at the chart. I think you're going to like that. At least, I do like it. So Jordan, what do we see? What are we always looking at when we're looking at DeFi or coins and tokens in general?
Are they completing their patterns? Are they in a more lower point? We don't want to buy them when they're surging up at a high point because then you're in a good position to lose some money.
So we have the falling 3 here. You see that?
Mm-hmm.
So it's now reorganizing. It already built a bottom. So this is the bottom line that we have. We have a foundation, and that was basically this peak here in the past. And the historical past is the bottom. That was the so-called support. What here was resistance. The way up pushing through that is support, bouncing like a ball here. And it reached it. So it's the first epoch token. It is doing what it needs to do, and it has a perfect launch pad that it's building currently. At launch pad is represented through this here. It broke already through. It's going to break a little bit. So it's a great buy. Great buying opportunity for Floki currently. And where is it going to go? What's a good buying opportunity? So let's look at a couple of support and resistance levels that are here currently. This here is one of the largest support and resistance levels, and just the went under it. So let me put a line in here. This year, you see it was under in red September. This was your buying opportunity here. There might be another one below that line, but everything with 4 zeros 86 is a buying opportunity. Everything with that and below is a buying opportunity. Is he going down one more time? Well, you see these crosses here? These ones here always give that a special attention, because these crosses here, little faded green. But these crosses do have a meaning. when you have a flag and something is breaking through this flag upward, then they might dip one more time down and then continue on that upward trajectory. If something breaks down to that point where it is under the flag, it's always a buying opportunity. We do have a buying opportunity. So don't ask the question, should I wait 3 counters down? Should I do it now? Everything under that line of 4 zeros, 8, 5 is basically a buying opportunity. When it is around that level, still around here in this level, it is still about, Jesus, hang on. If it's around these levels here, it is still a buying opportunity. So if you have super cojones and you have money to say, okay, I have money and I just want to be in the casino. I want to gamble. Then the lowest possible point to enter this would be 4073. But it might not go there. It might not go there anymore. I wouldn't risk it. For me, it would be perfect. Everything that is around that first blue line, that's already enough. So let's take a look on what it shows us where it wants to go. I actually switched now here to the weekly chart because it tells a nice story. It tells a longer trajectory. Nice story. You see, we have 1, 2, even a double top here, and 3 tops where it went down. And this is craving to go up. It's preparing, it's heating up for the bull run. Okay, you're going to be very, very surprised about the energy of Floki. Floki is a super high-powered token, and I will show you why. Look at that here. You see this bottom, and this top here. Let's put the Fibonacci ratio to it. What did it do in the past? And I'm not doing it perfectly. These are all just rough cuts here. Look at this. At 30618, it reset it and then went up. Another step. That thing is super powerful if it does the same thing. Now, I want you to look at this here. So what it did here, it bounced a little bit up and down. It's doing the same thing on a larger scale. Now, if that overshoots what we're seeing here, that is one of the craziest tokens that you can take a look at. So high volatility check, high risk check. Is it going to be something that whales are going to be using? Absolutely, 100%. What you see here is how much money went in here in February 2024 just to inject liquidity into this. A lot. So we're looking for a candle like this here. One of these candles. Once we see this, then we are really on a run with this thing. So currently, it's a good buy. If you're in the market for a cheaper token and forget more bang for the buck, take a look at that. Now let's take a look what it does in the future. And I'm going to take the low point and I'm just going to move it up to the first one here. I'm not going to go even to the second one because this here is a crazy one, really crazy one. One of the most high-powered coins and tokens. So waypoints here, waypoint number 1, 0.5, 0.618. This is, if you're super conservative, that would be between currently 4 zeros 85, and you would come here, that would be 3 zeros 46. So that would be already a nice catch. 3 zeros 46 to 3 zeros 49, 3 zeros 50, something like that. That's a waypoint. The next waypoint would be here. The next waypoint is higher up 3 0783 zeros 85. The next waypoint up is somewhere between 2.618 and 3. I'd rather take it higher than lower here because it has a lot of energy. So the larger set here is 2 zeros 111 to 22 zeros 13. And if it does that, that's 100 times right here because you're skipping 2 zeros. From 4 zeros to 2 zeros. Definitely.
Fits in that dig in coin category. So ones where you can potentially.
Yeah. Of all the three that we looked at today, Floki is the one that is the most energetic, that probably is going to be used by the whales more than anyone else. And if you have really book big cojones and that thing is on a run, it overshot it. It overshot it in its first energetic thing. So we're looking at something between, at the end of a bull run, at the very end of a bull run, at 3016 to 3001, 175, something like that, even higher. But we will see, because as with all the charts that we're doing, that we're looking at what is the crucial thing that it needs to do. It currently needs to get its ass moving and shaking over that line. When that line here is overshot, and I hope it's going to be overshot, then it's time to measure again from this low point here to where the peak is, and then we can see again, what does it want to do? What does it really want to do? Currently, we're not there yet. So right now, it's a great opportunity as a buy, and from the three that we looked at. So it makes absolutely sense to watch and listen to that, what we did to the end here, because that one from that. What reason? If you're a market for the low cap and the dig in and the ones that have leverage, this year looks the best.
If you look at the Floki USDT chart and gate, it'll kind of demonstrate what you mentioned earlier about it had a first kind of rally, then it reset, but it was higher. So yeah, the one on gate goes a little bit further back. Yeah, right there.
This year.
Yeah. So yeah, it's reset higher.
Perfect.
Yeah.
So what you see here is that's a great catch, Jordan. Thank you for looking this up. So what you see here is we do have a slightly pivoted positive one, and it's doing this. So even from the low points that you see, even on this chart here, the first low point, you have this one here. Look at that. So that's the channel where it's moving, and I'm just putting the channels in here for you guys. And that's the second one. Let's actually do 3. So that's the other one that we have. So that's the one. That's the midpoint here, the middle channel, because it now created another one. And that is this here. Hang on. This here is a channel. You see these peaks? So then you just touch a little bit on this. Okay, on this one. So that's basically a chart we're currently running under underestimation. That's undervalued currently. It wants to go up, and that these trajectories are always the bounce off points in the future. These 3 lines are the bounce off points this year it wants to do. And it's going to do it. Once it does that, we're going to measure it, and then we're going to say, okay, what is it possible? How does it look as a possibility to where it looks that it wants to go? Are we good on this?
Yep, we're good.
So Saturn rising. 3 exciting opportunities. The last one was the most excited. This is something that if I would be in the market for these higher leverages at a lower cost, I would look at that kind of a segment. And Floki here looked from a chart perspective the most amazing. So if you're in the market for them, take a look at that. Take it into consideration. What we did here today and showed you today is that what we're doing every week and how we're talking about opportunities in a changing world, because that changing world is going to have a lot of challenges. And if you're looking not only for your sanity, clarity, and a way on how to navigate these complex times with a lot of changes in the digital world, this is what we're doing. That is what we're talking about. And this is why so many people are here in our environment, in our group, to benefit, to thrive. With that, I'm saying thank you. And gentlemen, do you want to add something to that?
For you members that are watching this, we like to hear your comments and questions. You can put them in the comments below, and we read them all. Thank you.
This bull run is the really good part of this bull run is just getting started, but don't catch the FOMO. Don't lose your heads. Just try and stay calm. Get your sell orders in place and just try to ride the wave.